Good morning and good afternoon, all depending on where you're joining us at today. What a beautiful day. Today it was raining a little bit this morning. The sun's popping out. Things are starting to warm up. Yes, things are warming back up. Hopefully that's going to light a little spark into some buyers out there that want to go and start looking at some open houses. So hopefully that's going to start happening this weekend. It's Friday. Happy Friday to everybody. As you know, it's my favorite day of the week. I hope you had an awesome week. We are winding down 2025 in a hurry. These days just keep right on ticking by. Make sure you got a game plan set, how you're going to close things out, right? I always go back to my list, my past client list. I've got some referrals just this week by doing this, and we'll touch a little bit on that. Um, Welcome to Creating Opportunities. I'm your host, Bill Haga, Executive Loan Officer with Rocket Mortgage Local. I always stress local because my pricing's a good 1% to 1.25% better. And on a $500,000 purchase, that's a $5,000 plus savings for your client, simply just referring them to me versus allowing them to go online and fill out an application with Rocket Mortgage Call Center. Right? Big difference. All right, big difference. Today we've got a special guest, Miranda Baldridge. Hello, Miranda.
Hey, Bill.
Miranda's with Advantage Real Estate in Baldwin County, Alabama, and we've done tons of business together and looking for a number more, right?
Absolutely.
We have an interesting file that we're going to discuss here in the segment, and we're going to discuss really, how the government's affecting the file, right? The government shutdown. So I'm just going to buzz through the agenda right quick, and then we can jump into the government shutdown and the fun that it's causing.
Oh,
Right?
geez. Yeah.
Mercy. All right. So today's agenda: the government shutdown and how it's affecting some closings, the market, and what rates are doing now since the shutdown has ended. New programs coming out, um, and best thing since sliced bread. Should be pretty interesting conversation there.
Absolutely.
All right, so let's talk about this government shutdown. My goodness, 43 days.
Yes.
It's like fighting with your brother and sister or something. But
Yes.
this one went on for a long time.
Yeah, it did.
Yeah, and caused a big ripple, right?
Yes.
We know that a lot of services were being held up.
Mm-hmm.
Veterans weren't being paid. SNAP wasn't being paid.
Mm-hmm.
A lot of our single moms and single dads rely on these services, these benefits, if you will. And this is how people feed themselves and their family,
100%.
pay their mortgages and their car notes and everything else. Right? This is how we stay afloat, keep our credit scores where they need to be. So with the shutdown, what it's really done to one of our files. So give you a little history. So here's the file scenario. Client, great credit score, um, nice house, 500 and some thousand. You got it listed at.
Mm-hmm.
We know that it's got some unique features with it.
Yes.
However, the nuts and bolts of the deal, they only owe like 26, $25,000 on the house,
Mm-hmm.
right? So tons of equity. So we went in there with a bridge loan so
Mm-hmm.
we can pull some equity out of this thing and then buy their new home,
Correct.
right? Before, once again, selling their current home.
Correct.
So we're using, a pretty much buy now, sell later
Mm-hmm.
approach with this scenario.
Mm-hmm.
Okay. We got everything in. We got the file set up, disclose. It was lightning fast. We got our clear to close.
Mm-hmm.
We go to the point where we're scheduling. Now this is all in what, like 2 weeks. I mean,
Yes.
things moved pretty quickly, right? two
Yes.
weeks we're ready to close. We go to schedule this thing, and then bam, we get an email from the title company, right?
Yes.
And I'll let you kind of narrate from here and and then I'll just chime in from there since this is your client. I'll let you discuss it from your side of it.
All right. Basically, I got an email from our local title company here that was going to do the closing for the new purchase, that they had received notification. Now, let me back up. Okay, it's a VA foreclosure is who's selling it. So our title company that was going to handle that transaction here had gotten an email from the VA rep that handles the accounts that said, "Hey, this file is on hold." And title company's like, "What?" I mean, and the title company had just sent seller disclosures.
Yeah, we're
So
ready.
they had no clue. They were ready. We're ready on the lending side. We're ready on the buyer side. And title company sends the seller disclosure over to the VA, and VA says, "Hey, no, time out. We're on hold." Title company comes back and says, "What do you mean we're on hold? We're ready. Lender's ready. Buyer's ready. What's the problem?" The government shutdown apparently created a problem with them getting the documents and whatever they need on their end for the foreclosure packet. So the packet got rejected, so it has to be redone with the foreclosing attorney.
Correct.
We asked for an estimated ETA of when we might be able to close, and their initial reaction was, "We don't know." So, because the title company was putting pressure on the VA, I was putting pressure on the VA for an ETA for closing because, of course, my clients are, "This is not going to work. We keep, we've scheduled carpet cleaners, we've scheduled moving vans, we've scheduled all these things."
What a nightmare.
It's been crazy. But their best guess that they gave me is it could take the closing attorney up to 2 weeks, because I know for a fact that it is not just one or two transactions. I mean, VA's
Yes,
nationwide, so it's going to be a domino effect that's going to affect many buyers in this same situation. So I suspect that there are going to be many that are dealing with the VA that are going to be pushed back.
that's correct. So if you've got a VA file right now, if you're regardless if you're on the buyer or seller side, it doesn't matter.
Mhm.
If you're involved with one of these transactions, you can already go ahead and expect there's going to be delays.
Mhm.
Okay. If you haven't already witnessed it, right? It's just been going on for 43 days. This
Right.
is just the first one that's come across, in front of us.
Right.
So I definitely wanted to talk about it today and, you know, talk through it. So if you haven't, but you've got one of these and it's about to happen, you kind of understand, what's going on.
Mhm.
The good thing is when we lock rates, always lock rates a good 30 days out anyway to give us a little buffer. Sometimes, I mean, especially in this market, it takes a gut, takes some nerves
Yep.
to even float some rates at the right times. So if you lock too soon, then you have something like this happens. Now all of a sudden rates tank. What if they drop, 0.375%? You know, some people aren't going to be able to take advantage of that. However, those that are locked in, you're protected, right? You don't have to, have that late night thought at 2:30 in the morning, waking you up going, "Oh my God, did the rates go up again? Did my costs go up? Did my payment go up?" Right? Because these things are constantly changing with the market.
Mhm.
I always say, don't stress until you see stress on my face.
Mhm.
When I'm concerned, then you should be concerned. Until
Right.
then, we're just going, right down the processing line, just like a conveyor belt,
Mhm.
riding the pine.
Yep.
So, but interesting. So, yeah, so right now, just because, the VA, since this is a VA foreclosure, there's a whole package deal that comes with those, and the attorneys have to sort through and obviously check every box. And apparently, because of, when the government shuts down, you can't get a payoff.
Right.
So I'm assuming that's really the main part that's missing is the payoff.
That's what I'm assuming. That and dates probably need to be changed.
Correct. Dates, right? Everything needs to match accordingly.
Mhm.
So, it's probably minor,
Mhm.
but yet it's still holding us up,
Yep.
And we have a client who wasn't really expecting to be held up,
Nope.
right? They're super anal. They're for planners.
Very
Um,
much so.
I don't know if they're very spontaneous. They seem that everything's got to be grounded,
Yes,
right?
everything has to be grounded and move smoothly, and they struggle with not being able to control certain things.
Yeah, right. I mean, once again, we play psychologists, right?
Mhm.
we're
Counselors,
the
yes,
counselors. We're everybody in this relationship, right?
yes.
So, as we're trying to coddle and explain and educate and inform and you know keep everybody kind of off eggshells because we
Mhm.
don't want that. There's no reason for it, right? Here's
Right.
kind of the scenario. Everything's good. You're clear to close.
Mhm.
So everything on our financing side is done,
Correct.
right? We're just waiting. We can't schedule it because we're waiting.
Correct.
But once we're done with the waiting piece, then we'll have numbers and our final numbers, and then we'll be able to move forward. And it'll be a part of the conversation, years to come when you're talking about buying that house, right?
Absolutely.
So everyone's doing their their jobs accordingly. It's out of everyone's control.
Mhm.
However, thank you and everyone for your patience. We appreciate you. So, moving on, we've got some interesting things to talk about. So, let's talk about the market and interest rates and the Fed shutdown and what really took place there. So, we all know that Powell dropped the rates 25 basis points. Later that day, rates actually started to go up. They went up 3 straight days. I was spitting a couple times because I watch these things daily and pay
Mhm.
close attention, and a lot of my decision making is based off of what's going on and discussing it. Right, we're talking through it when we're going to
Mhm.
lock a rate and when we're not going to lock a rate.
Mhm.
So had some interesting conversations based off of what was happening. So far so good. We know rates were going to go up and they did.
Mhm.
Right. So if you're one of those that have a client that didn't get locked in, that's okay. These rates are starting to come back down again.
Mhm.
Mind you, rates were starting to go. I mean, once the government shuts down, it's like a data blackout.
Mhm.
Okay, so now they're really making decisions, not knowing all the information. No one wants to do that. It's not good business, right? So even though that they were still doing these things, so hopefully based off of this data that's going to start coming out that our economy's gotten better, right? We had some tariffs things that was bringing money in. We had a lot of things that were in play when that when everything shut down. So now it's time to get those wheels moving again and see really what happened, right? Because
Right.
it isn't like the economy just stops. No, just the data stopped
Right.
collecting the data. So
Right.
now it's time to collect the data, right? Just like our payoff, you got to collect that data, get it down to the day that we're going to close. So then all the odd days of interest and all that's calculated. Normally it's through the end of the month anyway, and they don't get that technical. But at the end of the day, everyone gets their numbers and we'll be able to close and we'll talk about that one for a couple of years, I'm sure.
Oh, absolutely.
All right. So back to the market. So we assume that our economy's going to keep on plugging and chugging, improving as this data comes out. And like I said, as that happens, the market loves great data.
Mhm.
So that's going to affect the markets, right? The markets, what's affect the rates. So we should see some adjustments, and hopefully those adjustments are going to be going down, right?
Right.
All right. So next thing on the agenda was the DSCR and closing in an LLC.
Mhm.
This is like my favorite program of all programs. And since I moved over here to Rocket 2 years ago, 2.5 years ago, I guess, I haven't had this program. So to have this program back, I mean, I want to do like a dance. you know, I want maybe the chicken dance or something. I don't know,
Right.
but I'm pretty stinking excited about this program. All right, they've even dubbed it the Bill Haga program because I talked about it so much not having the program
Right.
that now that we have it, it's kind of funny that my name's plastered right after it. So I'm sure I'll be giving the training to my team over it, but happy to do so because I mean, once again, this thing is amazing. So why is it so good? All right, so with our particular program, so the DSCR is really the debt service coverage ratio is the program. All right. However, everyone knows it by the DSCR program.
Mhm.
So what this really does, this empowers seasoned investors leverage their money. Okay. That's really about the best way to explain it. All right. So if you go to traditional programs, they limit investors a ton. This particular program opens it wide open to the point where we don't have to show income, we don't show employment. Yeah, that's true. We
Nice.
don't show either one of those. And the reason why is, once again, the debt services the credit.
Right.
All right. So think about that. Let's break that down for a second. So the every expense, right? Your PITI, your principal, interest, taxes, and insurance, HOA, if you got any HOA fees, any fee that gets tied to that mortgage is part of that debt.
Hmm.
Okay. So then you have income that property is going to produce.
Hmm.
All right. So basically, what we do, we take that income, divide by that debt, and that gives you a percentage. As long as that percentage is 1% and greater, we're in good shape. That means that the rents coming in cover the debt,
Hmm.
right? Now, mind you, we use a 75% figure there.
Hmm.
All right. A lot of people don't know that, and I don't want people getting tripped up on that. So let me grab my calculator right quick. Oh, there it is. So if that thing's making 3,000 in income, you're going to take that and go 75% of that income.
Hmm.
All right. So we're only going to use 2,250.
Okay.
Okay. Because we assume that it's not going to be rented 100% all the time. So that's like a vacancy ratio.
Right.
But the payment's only 2,000 bucks. Perfect. We still leverage, right? We're still over that 1%. So as
Right.
long as we're 1 to 1, you're in good shape. All right. So let's go a little deeper with these. So once again, these are designed for the experienced investors, purchasing and refinancing, right? We have both.
Hmm.
All right. Will not be using any personal income or debts to qualify. It's just that property. I don't care
Okay.
if you've got 5 other properties and those properties are losing money, right? Because I'm not looking at your tax returns. I don't care about any of that. All I care about is this particular property. Does the income off of it cover the debt?
Hmm.
If it does, congratulations, you're about to buy another property,
Right.
right? So we will compare the rental income for the property to the mortgage payment to help make sure that the credit is at least 1% or higher, right? That's the coverage. Clients will also be able to close in an LLC versus their individual name,
Hmm.
okay? Which is huge, right? They always teach us to keep things separated. Don't commingle, right? Don't do these things,
Hmm.
right? Because once again, you have it being married to someone who's been in insurance for 30 some years has taught me one thing. Yeah, I still hate insurance, but and
Right.
and and I think it's crazy how they do things and still make trillions of dollars in their industry. But anyways, there's certain things that insurance is going to cover you,
Hmm.
right? So it does make sense because you there's risk.
Right.
So based off the risk, that's well, I don't know where I was going with that, but anyways, oh, because you're closing in an LLC,
Hmm.
and that's keeping the risk off of you and your immediate family. So my wife's always saying, "Well, people who don't have enough car insurance to cover in case something drastically happened, well, now that person's insurance can now sue your insurance and now can go after your house, can
Mhm.
go after your car, can go after your right, because that's kind of the bleed back that happens.
Mhm.
By closing in an LLC, that kind of protects all that from those harms, if you
Mhm.
will. All right. So the ideal client for this DSCR program, typically real estate investors, people who are self-employed, who are own an LLC already, things of that nature. They understand how to leverage money.
Mhm.
They understand the importance of just being savvy and
Mhm.
financially sound and be able to really create your portfolio.
Right.
This is the best program to create your real estate portfolio as an investor. I
Mhm.
can't explain that anymore. So we always talk about past clients, right? I always say go back to your past client list.
Right.
This is a great opportunity to come back through your clients and say, yeah, this client had two or three properties. I remember that. Or yeah, we spoke to this person and they were interested in buying more property. You
Mhm.
know, these are great opportunities for you to pick up the phone again,
Right.
right? I mean, we're mid-November.
Mhm.
Things are starting to slow down, right? We got, Thanksgiving coming up, and then we've got Christmas. If you're, above really Tennessee, no one wants to move
Right.
in the winter. You ever tried moving in the winter? I've done it a few times. Yeah, it
Yep.
sucked. Nothing fun there. So most people don't want to move. That's one of the reasons why things slow down. People move because they find the house of their dreams, they're moving with their job, or something's happened, right?
Mhm.
That's kind of forcing their hand.
Mhm.
But no one wants to move. That's normally the time frame that we're in. But this is a great opportunity to pick up some business during this time because these people aren't moving.
Right.
They're buying and staying right where they're at.
Mhm.
Right? They're building their portfolio. So if you've got anyone that's savvy like that, I would love to have a conversation. We can get them on a Zoom meeting. We can explain the program to them if they're not aware of it and really teach them how to utilize it.
Can it
Okay?
close in a corporation name or does it have to be an LLC?
Yeah, there's a list here. I'm going to go through the list here of what we can and can't. Okay?
Okay. Perfect.
So now we understand how to calculate the ratio to see if the property is going to qualify, right? You take the rents, divide by the PITI, and
Mhm.
anything else that may be tied to that mortgage. And then as long as that ratio is 1% or higher, you qualify. The property qualifies, I should say,
Right.
right? Now, one of the things when you get into these programs, these rates are going to be higher, right? Because once again, we're not showing any income from you, no employment, no nothing. So the risk level is a little higher. So,
Right.
of course, you're going to see that in an interest rate plus a down payment. These
Mhm.
are normally 25, 30% down payment programs.
Mhm.
Okay. And that's the reason. That's kind of the give and take, right?
Mhm.
Um, what's kind of nice to get a lower interest rate, you can actually take a prepayment penalty, right? So if you know, hey, I'm going to hold that property for 5 years
Mhm.
before I even think about selling. Okay. Well, a 3-year prepayment penalty ain't no harm if it's going to lower your rate and lower your payment,
Right.
right? Maybe even a 5 year. You just wait until that 5 year clicks. You're selling anyway,
Mhm.
right? To get a lower payment.
Right.
Okay. I mean, once again, when you're getting ready to sell an investment property, you want the numbers to look good,
Mhm.
right? That's, I mean, you're selling it. You got to
Right.
know what the numbers are. And the new buyer, as an investor, probably they want to see the numbers too.
Mhm.
So these are easy ways and things within the program that will help us do that. Loan terms. Another kind of cool thing about these. Now these are called non-QM, non-qualified mortgages, right? Because they don't fit Fannie Mae, Freddie Mac typical conventional guidelines.
Right.
All right. So that's why these programs have different terms and different, bells and whistles. For instance, I mean, these come with a 40-year. You can do a 40-year term.
Mhm.
Conventionally, right now, we're maxed at 30.
Right.
Now, we've heard, right? I had an
Yep.
Ashley Bobo reach out to me this morning. What's this about a 50-year mortgage? Yeah, they're talking about them. They're saying they're coming, right? So let's unpack that for a second. So if we extend loan programs from 30 years to 50 years, then all those clients who had to be turned down because of debt to income ratios, or were having to buy on the other side of the tracks where the neighborhood wasn't so good, so it's better just to rent over here in the good area, and I'll try to save as much as I can so I can buy.
Mm-hmm.
Well, guess what? Now those people can buy,
Right.
right? So once again, you got to go back to your clientele list. Let's go back to your clients, run down through that list
Mm-hmm.
who didn't get approved, right? Who's out there, or who was settling for something less than what they really wanted to,
Right.
right? You're showing homes to them. They're talking to you. They're like, man, I mean, there's no way I can get approved for another 30, 50 grand,
Mm-hmm.
so I can buy this house versus that one. Well, no, because your debt to income ratios are what they are. I mean, you only make so much,
Right.
and you got this payment. Well, if they break that into 50 years, well, that payment just got a whole lot more manageable. I mean, I've got a whole list of clients
Mm-hmm.
that I'm waiting on. If you've got a client right now who has already purchased and been in their home for a bit and need to refinance and get a lower interest rate, right? Because a lot of people have purchased with 7.5% rates.
Mm-hmm.
So these people need to refinance. Well, we just came out with a new program that non non credit qualifying,
Mm-hmm.
and we just cleaned it up so we can qualify more people. So
Mm-hmm.
if you had someone that needs a refinance but couldn't refinance because of their debt or their credit scores, that's a great opportunity for me to help somebody right there.
Mm-hmm.
Okay. So let's get back to these programs. So with this DSCR program, you do have to have a good credit score. All right. Got to have 680 or above is really where these programs start kicking in at. All right. Um, you're normally, like I said, putting 25, 30% down, just depending on your credit. Okay. Reserves. Let's talk about reserves right quick, because that's the other key factor, right? Got to make sure that if anything breaks, got to be able to fix it, right? So within these programs, you're going to have anywhere from 3 to 6 months of reserves that you're going to need. Reserves is, I believe, once again, just based off of that property. Okay. Not your whole portfolio if you have one. And then, like I said, you can close this in your name, a trust, or an LLC. No gifts are allowed on these programs. Okay, you're an investor, right? You should need a gift. Should
Mm-hmm.
already be there. Um, Max finance properties, 20. Not too bad,
No.
right? I think that doubles conventional,
Mm-hmm.
right? I think it's 10 still for there.
Yeah, I think so.
Um, but that can also be an interest only payment too on that 40-year. So that's pretty stinking nice. So closing in an LLC. So up to about 75% of all investors who use the DSCR program are closing in a LLC, right? So terminology, so you got a limited liability company, that's the LLC. That's really just a business structure, right? That combines your personal liability protection and yet liability protection of a corporation with the tax flexibility. And then you've got the LLC member or owner, right? You got to own, I think, 25% or more. You can be an authorized agent. You can do a living trust. There's foreign LLCs, and there's even member resolutions. All right. So if you have any questions on, you know, how it can be titled, just give me a call. We'll run through those and make sure. But oh, here it is, ownership. So LLC eligibility must be in good standing, and only one LLC may take title to the property. All owners of the LLC must be natural persons or a revocable trust. Irrevocable trusts are not allowed on these programs. Only an LLC is allowed to take title, which means no partnerships, no S corps, no corporations, nothing of that nature. Right? It just
Okay.
has to be an LLC. At least one client on the loan must have ownership of the LLC and meet the minimum ownership guidelines. Clients who are borrowers on the loan must have a total of 51 ownership interest in the LLC. So, in this example, say one client owns 30% and the other clients own 25%. Combined, they meet that 55, so they're over the 51. But you still have to have at least, controlling rights, 51% or more. All right. This is what I love, the documents. That list is about that long.
Oh, geez,
I
that's
love,
nice.
yeah. So for documents, we need the LLC certificate, right? Its existence, so we can show it's in good standings. The articles of organization or formation, the LLC operating agreement, and the um, LLC's member list.
Mhm.
Yeah, and a couple bank statements.
That's easy.
That's pretty nice, isn't it? We can do that all day long compared to the documents that we give out now, right?
Woo, 100%.
Dang, dang, dang. All right. Now, the best thing since sliced bread. I know that's a pretty tough one to overcome, but I can't talk enough about our moving our underwriting from middle of the process and the end up to the front. I mean, so what this is truly doing, I mean, we're approving. All right, so let's back up for a second. I've been a loan officer for 23 years. I've been providing pre-approval letters for 23 years, and it's always you verify credit, you always look at income, you're always looking at assets, and then you're running it through an automated underwriting program that's provided by Fannie or Freddie. Is really the process, right? So that's a pre-approval. We call it. It's probably more of a prequal,
Hmm.
as it's really entitled, but people freak out about a prequal. A pre-approval really comes from an underwriter. All right, right. You get a conditional approval, right, when the file's in processing.
Hmm.
That's when an underwriter reviews that file and says, okay, they're approved based off of these conditions.
Hmm.
All right. That's the first moment that an underwriter normally would see a file.
Right.
Now, here at Rocket, and what we're doing on a daily basis and making huge differences is we moved our underwriting to the front. So, as I'm collecting the documents and I'm verifying everything that I'm doing, we call those a PAL, you
Hmm.
know, a pre approved letter. Okay. So I'm going to email that out, but I'm also going to submit your file into underwriting the moment that I do that, right? So I send that information out so you can start looking right away.
Hmm.
While you're doing that, we're working behind the scenes and getting your file to the underwriter so the underwriter can underwrite you as the buyer and make sure that you clear all the conditions.
Hmm.
So once that's done, and it's normally within 24 hours of submitting the file, sometimes within a couple hours, which is just impressive. And at that point in time, now we're printing instead of a PAL, now we're giving you a VAL, a verified approval letter. That means the underwriters verified everything. So on our approval letter, we've got credit, we've got income and assets.
Hmm.
When I do the pre approval, the only thing that gets checked is the credit. Okay. Because
Hmm.
I'm not an underwriter, I don't
Right.
approve income and assets. They do. Right. So with me being able to submit it into an underwriter and getting you approved, getting your clients approved, we just knocked out, you know, 1/3 of the process. So now all we need is a nice clean title,
Hmm.
a good appraisal with value and as is,
Hmm.
and we're ready to close.
Hmm.
Right. So typically speaking, we were always 25, 30 days to close,
Mhm.
generally. Rocket was always faster than the market. That's, Rocket. And now, we're 15, 20 days to close
Mhm.
versus 20 to 30 days.
Mhm.
Because once again, once we had the buyer qualified, it's just everything else needs to fall in place.
Right.
And mind you, we ordered that stuff 2 weeks ago.
Mhm.
So it should all be here. We're ready to close in that short amount of time, which is huge because some sellers want to move on to the next home,
Right.
right? Some scenarios you need to close in a matter of short period of time just to make the deal work.
Mhm.
So, think about that too as you're bringing on new clients and listening to their scenarios, you
Mhm.
know, because once again, it's, clients are coming to you bosses first. Just need to make sure that you're passing those leads out to the right people, right? Make
Absolutely.
sure that, that you're getting that client's biggest bang for their buck. I
Mhm.
mean, our 1.0 temporary buy down that's given, people 1% less than the market rate for the first year.
Mhm.
I'm still speechless about that. But I'm even more taken back that it's not being used as it should be.
Mhm.
There's so many more people that could qualify for a rate that's 1% less than what they're doing right now for the first 12 months.
Mhm.
After that, it's just going to adjust back up to what the rate was when they locked it,
Mhm.
right? Like everybody else's. But
Mhm.
for the first full year, they can save all that money,
Mhm.
which is huge. So I'm excited. I love it. I love our industry, even though it comes with all these ups and downs and,
Whew.
things from right field and, all these things that we can't control,
Mhm.
but we still stay professional. We still, maintain our composure because trust me, I mean, speaking to clients for 23 years, they can sense things in your voice, the manner that you text,
Mhm.
right? So you got to make sure that you're constantly focused on how you're delivering the information. I said,
Absolutely.
and it even happens to me. I got checked yesterday. I sent an email. I wasn't even mad, upset, or nothing. I was just passing information on, right?
Uh-huh.
So I just sent an email and passed information on, and said, will you please take care of this so we can hit our closing date? And then my boss is like, hey, what's up? I'm like, I don't know why. What's up? And he's like, that was a little strong email. I'm like, oh, was it? Oh, well, I'm sorry. I don't want to come across like that, right? That's not
Mhm.
who I am. I wake up every day happy, ready to hit the road running. I mean, I'm gangbusters,
Yep.
right? And the last thing I want is anyone to, take offense of anything that I say by any means,
Mhm.
because that's just not who I am. It's not even how I think. So it took my wife a long time to even figure that out. She's like, "You're just different. You're weird." I said, "No, I am who I am inside my house and outside of my house.
Mhm.
That's who I am. I'm
Yep.
about as transparent as it gets." So, yes. So, be kind, be thoughtful, and make sure that you're aware of how you're coming across because you may not know it, just like I didn't know that.
Right.
So, in these tense situations that we have, because I mean, people's anxieties are about to jump out of the box, right? We've
Mhm.
got to thank God we don't have attorneys, right?
Mhm.
Because if we had that, then that would add another layer of drama to this thing.
Yes.
So, as bosses, we'll continue doing what we do and, keeping everybody at bay. Everyone understands that everything's good. We're going to close and it's just a little hiccup in the road.
Yep.
All right. So if you have those scenarios, just make sure you communicate that to your buyers and everybody will be okay. All
Yes.
right. Well, that's all I've got for us today. Thank you, Miranda. I appreciate you, your collaboration, your friendship. Always a pleasure to speak with you and have you on.
Absolutely. My pleasure.
So thank you. You enjoy your weekend.
You too.
I will have my laptop on, my cell phone on. So if you've got anyone who needs to be approved, I'm here for you. Our underwriting team works on weekends too, so we can get verified approval letters.
Nice.
Once again, like within hours, it's just crazy. And then at that point in time, that buyer is like the next best thing to cash.
Mhm.
right? I mean, that's how you look at them. When you got a verified approval letter, it's not cash, but it's the next best thing.
That's right.
You know that client at least qualifies based off of what we've seen everything turned in.
Right.
So I love it. Let's get them under contract and let's get some keys. All right.
Absolutely.
Thank you for your time, everyone. Take care. Have a great weekend. Bye bye.
Bye.